Hi, this is Simon with Trade and Perform Coaching doing the trade review for the 5th of June. And man, talk about well, it was certainly a solid update, but the opening was less than easy. So a couple of things. First of all, we obviously, I'm going to keep the majority of the focus here on ES. So clearly we're in an uptrend and we've been grinding higher. And part of the difficulty when we're grinding higher is, A, it makes it very hard to take the shorts to the short side, right? Obviously, because there's a certain amount of psychological fear. But the flip side comes into it as well, which is we're so far extended from any kind of base that a quick correction to the downside could also kill you. The most difficult part of this is what this environment encourages is chasing, really, because people see day after day that they're missing their moves. I try to take the opposite focus, which is I know that these narrow rotation grind up days will come to an end and they'll resolve themselves in having a two-way market. Now, from what levels we do that in, I don't know, but I certainly know that that's on tap. So in the morning, we actually gapped above Wednesday's high. This is what I'm looking at right here. And my initial reaction actually for the first really the first 15 to 30 minutes was that instead of trying to, excuse me just one second, please. Dog got slightly out of control there, guys. Sorry about that. So I didn't want to make an overcommitment, right? I'm definitely not going to chase to the upside here to take up, and I also didn't want to take a trade to the short side without getting below Wednesday's high. And the one thing that I was emphasizing in the market preview was that this entire area from here down to here was a total cluster. And the reason for that was several reasons. So if we got below Wednesday's high, one could argue that we were actually failing and we were going to make a move to test the lows, right? We also had gap fill in the same area, and we had Globex lows right here. So we could have simply come in. The options could have been come in off of Wednesday's high, push higher, come in and get gap fill and push higher, come in and get Globex low and push higher, right? Any of these three could have worked, right? Or there was structure down here where we had the first hour low, and I actually removed it from the chart going into the day. And the reason why is I didn't feel there was enough rotation down in this area. Okay, so the fact that we had three options that could work to the upside and one that could easily work to the downside, right, made making a clean decision very difficult. Okay, and what usually happens in this situation is instead of being able to take a contra trade successfully, right, what most retail traders will do, or inexperienced traders, is they'll buy here and try to take it long, and they'll try to use a tight stop, right? And then when we get below, they'll go, oh, well, we broke prior day's high, we broke Globex low, we must be trading lower, and then they'll look to try to, because what people are searching for in both these areas is that they're looking for the security of being able to make a decision without having to take an enormous amount of risk. But really what they're trying to do is soothe their own feelings about risk, is what we're all trying to do when we're working through a trade. So without going into great detail, what I determined was that if we closed below Wednesday's high, that I was going to take a short, on a 5-minute bar, I was going to take a short to the short side. It wasn't the easiest trade setup, but it was the cleanest thing to get in definition. My stop was going to be 1 point behind the swing high, which turned out to be the first hour high. And the setup was really relatively straightforward. I took the first, my first entry was at 1925, and I took an additional 2/3 of the trade at 1926. Seems like, you know, and then my stop was essentially at 1931.50 is where my stop was going to be sitting, right? So once I was in the trade, okay, so I took the trade here, right, and they actually pushed up decently, not horribly, right? But from the time I entered this trade on the close here, it took a full 10 minutes before I even got up on the trade, and even within that period of time, they kept pushing higher. It actually required quite a bit of patience in here, and you'll also notice there was a tremendous amount of whippiness going on in here, and that was reflective of two parties trying to fight it out and to determine which way they were going to take it higher. Now, I said in the morning, even before we opened, that I thought in 1938 that the market was going to make an attempt to get visited, right? So here's the tricky part about being a day trader. You could have said, we're going to 1938, taken a long here, gotten stopped, and been down on the day. Okay, so which brings me back to letting the market rotate and having the discipline to let it come to you. Now, in my particular case, I simply finally made a decision that if we got below Wednesday's high, I was going to make a shot for a trade lower. We had traded clearly above this level in pre-market, okay, and as a matter of fact, we had traded all the way. Globex high was all the way up here, okay, so we had traded all the way up here in Globex high. At one point, just prior to the open, we were trading below, and this pattern of trading significantly above a prior day's high, and then by the time we get into the open, trading below prior day's high is often the setup for a blow-off top, and that's what I decided I was going to play for. The last piece of triggering that entry was going to be my entry on the first 5-minute bar close below, excuse me, below yesterday's high. So why did I have to do it that way? Well, if I simply took the trade here, I still had the support working from prior day's high, and it could have simply pushed higher. I didn't want to do that. I wanted to see sellers willing to commit to getting below and holding below. And then the other part is I needed a clearly defined area. I obviously wasn't going to use 1934 from 1926 as a stop. That would be an unaffordable stop relative to my size of my account, and in my eyes, unnecessary. So I took the trade, and then here was the part that was very important in here. Once I committed to the trade, once I saw it come back to 1927, I didn't freak out, right? Even though we traded above 1927 for a brief moment, even though it sat there for 15 minutes, almost 15 minutes after I entered the trade before finally rolling to the downside, right? I stuck to my guns and was rewarded for it. I was able to take a scale at 1925 the first time down, so that was 2 points from the 27 entry that I took. Is that 25, 26 or 26, 27? I believe it was 1926 and then 1927 were my entries, but they might have been 25, 27. As a matter of fact, let me pause it and go back and look at my trade sheet here real quick. Okay, so I got it straight. The first third of the trade was entered at 1926. The second part, 2/3 of it, was entered at 1927. The first scale I took at 1925, right? And then I took an additional scale at, let's see, going through the sheet here, let's see, 1923 and 3/4. So depending on where you're measuring it, that's either 2 1/4 from the 1927 entry. That would have been another 3 1/4, right? And then finally, I took another scale at 1922 plus 5, right? And that pretty much left me with about half the position. And I moved the stop down to essentially what was break even at that point, 1927. And I guess the point of all that is, I had pre-planned my trade. I had a specific idea on the type of setup I was looking for, which was a move to the downside from a blow-off top, which is certainly reasonable, right? Look how far extended we are at this point on the chart. I'm going to show you all this real quick. All right, collapse this. Okay, this is a pretty good extension, even from this base right here, right? 1860 to 1940. We're at 80 points. Now, 80 points isn't a must-have correction point. We can move as much as 100 to 150 points and still be within reason of a normal or quote average move up. We've seen. I can show you plenty of examples of 100-point moves that have little to no counter rotations back down, both up and down actually in ES. So nothing outrageous here so far. But that being said, right, I was still able to manage even in what is essentially a straight up market by being patient and waiting for my proper entry, trusting that, and this is key, not moving my stops when the trade wasn't working for me and giving it time to work out, right? I know this trade set up well, right? And then the last piece that I did was well, which was maybe the most important. I started to get excited as we were getting below that 1924, thinking, hey, we could really get into that 1912, 1910 area, maybe even on a big stretch get down to 1903. And I caught myself in that process and said, wait a minute, don't forget to scale and take profits as this thing is going down. control risk, bring stops down to break even after I took 3 scales out of the trade, right? And what that ensured me is I put money in the pocket. And if you were in the trading room, what I specifically said was there's still no reason why responsive buyers can't step back in and push this back to new highs. And if I knew how correct I was, I would have simply turned around and taken the mirror image of this trade, which triggered right here, and taken it to the upside. However, I was playing for a downside move. I hedged my backside to make sure I didn't get ripped apart if I was wrong, which was obviously smart. The other trade that I took today, I did not take a trade here, okay, and it just didn't set up the way I wanted it to, right? We were grinding. It took me a lot of emotional energy to manage this trade here, but if you'll look, even if you took the trade at the front of the zone, right? This is 1923.25. This is the first time we tagged 1923.25. 5, 10, 15, 20, 25 minutes. At 25 minutes, you should not have been down really more than a point to a point and a half on that trade. It's plenty of time to exit. I usually leave a maximum of 25 minutes for a trade to work out. Even if you decided at this point, at this 25 minutes, all you had to do is move your stop to the back of this zone, right, to the swing high, and you still would have limited yourself to a 2-point stop on a straight up day. However, I did not take a trade here. I did not call out a trade here. The other area that I did take a trade and I did call out was right here at 1937.50. I entered the trade essentially, I think right here actually. And if we look, this is 5, 10, 15, 20, 25 minutes, okay? At the end of the 25 minutes, I covered at 1938. You actually had 30 minutes or even 40 minutes to cover this trade, right? For almost flat. I lost 2 ticks here. This is what you call risk management, okay, guys? I did not know that that would be the top for the day. I just simply, based on my own internal calculations and the way that I look at the market, thought that that might provide a maximum range extension for the day. And so, with that being said, I did the right thing. I let time manage my in and out on the trade. I gave back 2 ticks on the day. I still had a fantastically profitable day. I also had a great trade on NQ that worked out quite nicely. So my point is this. Even if I didn't get the up day, I still had plenty of profits. For those traders who tried to capture the up day, my guess is there weren't many who entered down here and captured all of this. I didn't see a lot of people calling for the move. I did call for 1938, right? But I still didn't get the setup. I thought we had a roll to the downside, right? And even for those who were thinking we were going to go up, man, how much do you want to bet on retail traders that guys got totally smoked to the downside here? And then this is usually what happens to those guys. When we get a bounce back up, they step back into the short side here, and they got smoked a second time as we were going higher. This is not an easy market. We have not been having great rotations, and we have not had a lot of intraday volatility past the first hour. Okay, so use time as your one of your guides for controlling risk. Use trade location as one of your guides for controlling risk, right? And then the last piece is, right, manage your emotions, meaning recognize how you're feeling, verbalize how you're feeling, right? And then match against how you're feeling against the reality of the trade. Meaning, just because you feel it's going to bust higher, right, does not mean you have a setup it does not mean that you need to cover the trade, okay? You need to see that if what the market is doing is confirming what you're feeling, or is actually what you're feeling is simply a figment of your imagination and is not being confirmed by the market's price action. Because I can tell you, when we were in here and we made a push back up, okay, I took the short in here, and when we made this push back up over 15 minutes and hung up in here, I felt almost certain that we were going to come up and run this over. However, when I express my anxiety about getting run over to this point, I go back and I rely on what? I have my data from my spreadsheets that give me confidence to be able to take my trades over and over again. Secondly, I have I entered the trade correctly. I followed my setup. Number 2. Number 3, the stop I view as a benefit, not as a loss. Okay, it keeps me from burying my account in a day, and because of all that, I was able to go, okay, I may be feeling anxious about this trade, but I'm going to stick to the setup. I'm going to leave the stop in place. I've only been in the trade for 15 minutes, and I was well rewarded. And then the last piece was, of course, coming in and taking some of the cover, and then making a decision not to re-short when I was up in here. Obviously, this area wouldn't have hurt me too badly if I did take a short, but I didn't take one here. And where I did take a short, I allowed the 25-minute rule to protect me. I got out minus 2 ticks no serious damage done. I didn't do anything in the afternoon. So I hope everyone had a wonderful day. Please join us tomorrow morning. I'll open the room to all comers. I will post the link on StockTwits and Twitter in the morning. And if you would like a trial to the AM market preview, simply send me an email to tradeandperform, just like I spell it, TRADENPERFORM @gmail.com. And I look forward to having everyone in the room tomorrow, and I look forward to having another profitable day. I hope everyone has a great night, and we will talk to you soon.